Tokyo once glittered like the future of capitalism. In the 1980s, Japan shocked global markets. Its growth seemed unstoppable and flawless. Corporations expanded across continents rapidly. Real estate prices climbed without limits. Office towers became symbols of national pride. Land in Tokyo surpassed global valuations. Some plots exceeded Manhattan prices. Investors believed scarcity guaranteed profit. Banks fueled dreams with cheap credit. Interest rates remained historically low. Loans flooded businesses and households alike. Speculation replaced careful investment decisions. Risk was treated as outdated thinking. Confidence became Japan's strongest currency. Stock prices rose without clear justification. The Nikkei climbed toward unimaginable levels. By 1989, it neared 40,000. Newspapers celebrated endless prosperity. Politicians praised economic superiority. Japan purchased landmarks abroad proudly. Rockefeller Center shocked American observers. Hollywood studios entered Japanese ownership. Golf courses cost millions per membership. Luxury consumption became socially expected. Corporate bonuses reached absurd heights. Executives were treated like royalty. Banks competed to offer larger loans. Collateral values were endlessly inflated. Paper wealth replaced productive output. Manufacturing profits were reinvested in land. Factories became secondary to speculation. Financial engineering dominated boardrooms. Balance sheets disguised growing fragility. Regulators ignored warning signs quietly. Political leaders feared slowing growth. Central bankers hesitated to intervene. Stability appeared more important than discipline. Media amplified optimistic narratives. Skeptics were dismissed as pessimists. Economic textbooks praised Japan's model. Western analysts predicted permanent dominance. The yen strengthened against major currencies. Exporters gained additional leverage. Trade surpluses angered foreign governments. Diplomatic tensions grew with Washington. The Plaza Accord reshaped currency markets. The yen appreciated sharply afterward. Cheap money flooded domestic assets. Asset inflation accelerated dangerously. Property became a speculative instrument. Apartments functioned as financial products. Families borrowed against rising valuations. Mortgages expanded beyond rational limits. Retirement planning relied on asset growth. Savings shifted into stock portfolios. Brokerage firms gained immense influence. Trading floors became social hubs. Young professionals chased rapid profits. Long-term planning seemed unnecessary. Traditional frugality faded gradually. Consumption replaced post-war discipline. Luxury imports flooded shopping districts. Brand status defined social hierarchy. Economic success shaped national identity. Confidence bordered on collective arrogance. Risk models were ignored completely. Warnings from abroad went unheard. History lessons were forgotten. Previous bubbles were dismissed. Every rise was seen as permanent. Every decline was seen as temporary. Financial newspapers encouraged speculation. Television promoted wealthy lifestyles. Universities taught aggressive investment. Banks hired reckless traders. Compliance departments remained powerless. Credit committees rubber-stamped loans. Internal controls weakened slowly. Corruption networks expanded quietly. Political donations influenced oversight. Lobbying delayed regulation. Short-term profits dominated thinking. Ethical concerns were minimized. Shareholders demanded constant growth. Executives feared disappointing markets. Performance bonuses fueled excess. Debt accumulated invisibly. Balance sheets became fragile structures. Stability rested on inflated numbers. Confidence masked systemic weakness. Warning lights flashed silently. Few leaders dared to act. Change was postponed repeatedly. The bubble expanded relentlessly. Pressure built beneath prosperity. Reality waited patiently. Correction became inevitable, but no one prepared. The peak arrived suddenly. In late 1989, policy finally shifted. Interest rates were raised cautiously. Markets reacted immediately. Stock prices began to fall. Panic replaced confidence overnight. The Nikkei collapsed rapidly. Trillions vanished within months. Paper wealth evaporated instantly. Real estate followed downward. Property values crashed nationwide. Collateral lost credibility. Banks faced massive losses. Non-performing loans multiplied. Balance sheets deteriorated quickly. Credit availability tightened sharply. Businesses lost financing access. Investment halted abruptly. Construction projects were abandoned. Office towers stood half empty. Employment security weakened. Lifetime jobs disappeared gradually. Corporate restructuring intensified. Layoffs became socially acceptable. Middle-class anxiety spread. Consumer spending declined steadily. Deflation replaced inflation. Prices fell year after year. Profits shrank across industries. Wages stagnated permanently. Household confidence collapsed. Savings increased from fear. Demand weakened further. A vicious cycle emerged. Banks avoided risky lending. Zombie companies survived artificially. Government bailouts prevented collapse. Bad loans were hidden. Accounting tricks delayed recognition. Transparency remained limited. Public trust declined. Taxpayer funds rescued institutions. Political accountability remained weak. Reform attempts stalled. Bureaucratic resistance persisted. Structural problems deepened. Productivity growth slowed. Innovation lagged competitors. Entrepreneurship faced obstacles. Risk aversion dominated culture. Failure became stigmatized. Younger generations felt trapped. Career mobility declined sharply. Social expectations remained rigid. Housing ownership became unreachable. Marriage rates declined. Birth rates dropped continuously. Demographic decline accelerated. Pension systems strained. Healthcare costs increased. Public debt expanded. Stimulus programs multiplied. Infrastructure spending surged. Growth remained weak. Recovery never fully arrived. The lost decade became decades. International influence diminished. China replaced Japan regionally. Manufacturing relocated abroad. Supply chains shifted. Corporate headquarters downsized. Executive compensation normalized. Shareholder activism increased. Foreign investors gained leverage. Governance standards improved slowly. Transparency increased gradually. Risk management strengthened. Lessons were institutionalized. Excess was remembered painfully. Speculation lost its appeal. Prudence regained respect. Yet confidence never fully returned. Collective trauma persisted. Economic ambition became cautious. Long-term planning resurfaced. Stability replaced rapid growth. Security became priority. Innovation focused on efficiency. Robotics filled labor gaps. Automation expanded quietly. Export strategies adapted. Regional partnerships strengthened. Energy dependency was reduced. Environmental policies improved. Corporate governance matured. Education emphasized resilience. Financial literacy expanded. Crisis memory shaped policy. Overheating was feared. Bubbles were monitored closely. But scars remained deep. The bubble became a national warning. It reshaped Japan's collective mindset. Success was no longer trusted. Wealth became emotionally fragile. Risk was associated with pain. Caution defined economic behavior. Opportunity felt dangerous. Ambition required justification. Stability became the supreme value. Innovation slowed under social pressure. Failure carried lasting stigma. Youth delayed major life decisions. Dreams were postponed indefinitely. Security replaced experimentation. Corporations avoided bold strategies. Managers prioritized survival. Shareholders accepted modest returns. Long-term planning replaced speculation. Government embraced incremental reform. Radical change remained rare. The past haunted policy debates. Every boom raised suspicion. Every surge triggered restraint. Collective memory guarded markets. Pain became institutional wisdom. Prudence replaced euphoria. Discipline replaced fantasy. Patience replaced greed. Reality replaced illusion. And history wrote its lesson.